week with me. Don't forget to like, share, comment, and subscribe. Oil stabilizer. After dollar let fall, crude oil prices stabilized overnight after falling other risk assets down in the wake of the Fed decision in making the dollar more expensive. The Fed also made oil and any other commodity prices in dollar more expensive for the rest of the world, something that is increasingly weighing on analysts' forecasts for the mine. By 06:30 ET, crude futures were up a modest 0.3% at $83.20, having bounced from support level overnight without making a new low for the week. Brent crude was up 0.3% at $97 a barrel. Prices had also come under pressure on Wednesday from the U.S. government, reporting the biggest weekly build in gasoline inventory since July, suggesting that final demand from the U.S. economy is weakening a little faster than expected. Most Asian currencies fell further on Friday and were headed for steep weekly losses as hawkish signals from the U.S. Federal Reserve boosted the dollar, while government intervention in currency markets supported the Japanese yen. The yen rose 2% to 142.09, the dollar recovering from a 24-year low on report that Japanese authorities had bought yen on the open market to boost the weakened currency. The intervention helped the yen recover from the double whammy of a hawkish Fed as the BOJ maintained its ultra-loose monetary policy despite economic pressure from rising inflation and slowing growth. The currency was set to rise 6% this week after 5 straight weeks of losses. Still, the outlook for the yen remains dim given that the BOJ is now the only central bank in the world to maintain negative interest rates, putting it at odds with rising lending rates across the globe. This has severely pressured the yen this year and also caused considerable weakness in the Japanese economy. Broader Asian currencies were still reeling from a Fed rate hike earlier this week, where the central bank struck a more hawkish tone than expected. The dollar index and futures were largely unchanged on Friday, but remained pinned near 20-year high. They were set to rise 1.5% each this week. U.S. Treasury yields also rose further, pressuring Asian markets. China yuan paid 2%, hitting a fresh 2-year low of 2,957 against the dollar, while the Indian rupee hovered around a record low of 81. While currencies were set to lose about 1.8% each this week. The yuan is also among the world's hit Asian currencies this year, as the People's Bank of China began trimming interest rates to support economic growth, going against the trend of rising global rates. On the other hand, the People's peso rose 2%, recovering steadily from a record low after the central bank hiked interest rates as expected. The country, like most others in Asia, is facing elevated inflation level amid rising commodity prices. Losses in the Indonesian rupiah were also limited after the central bank hiked rates by more than expected on Thursday. The US dollar edged higher in early European trading Friday, remaining in demand after the Federal Reserve hawkish stance, while the yen was buoyant after the intervention of Japanese authorities. At 0250 ET 0650 GMT, the dollar index we track the greenback against a basket of 6 other currencies, aged 1% higher to 100 1 to 111 to 148, just below the 2-decade high of 111.81 hit in the previous session. USD or GPY fell 1% to 142.28, continuing to fall after a drop more than 1% on Thursday after Japanese authorities intervened in market to support the yen for the first time since 1998. Okay, maybe that's all from me. Thanks for watching. Don't forget to like, share, comment, and subscribe.